Hello guys, welcome back with me. Don't forget to like, share, comment, and don't forget to subscribe. Regulators have weak against FTX on deposits insurance. FTX made an error in messaging when it suggested depositors were insured, but federal regulators will have a hard time proving the exchange did so with sinister motives. In a cease and desist letter to fast-growing crypto exchange FTX, the Federal Deposit Insurance Corporation (FDIC) shed light on a now-deleted tweet from the exchange president, Brett Harrison, and issued a stark warning over the company's messaging. Harrison's original tweet said, "Direct deposits from employers to FTX US are stored in individually FDIC-insured bank accounts in the users' names," he added. "Stocks are held in FDIC-insured and SIPC Security Investor Protection Corporation insured brokerage accounts." Also, Harrison stewarded FTX to its best ever year in 2021, increasing revenue by 1,000%. The firm now faces the unfathomable prospect of running afoul of a powerful government agency. In an attempt to clarify the situation to his 761,000 Twitter followers, Brett said, "Clear communication is really important. Sorry, FTX does not have FDIC insurance, and we've never said so on website. Banks we work with do. We never meant otherwise and apologize if anyone's misinterpreted it." But it seems the statements made on Twitter by Harrison in response to the FDIC cease and desist letter over false statements were factually correct. User funds are held at banks insured by the FDIC. His original communication were construed as if the funds were themselves insured, which they are not. Either way, firms are not allowed to mention a relationship with the FDIC unless there is a direct link and the correct language is used to clearly describe it. This was an error in messaging on the part of FTX. A mistake was definitely made, inciting perhaps rightful outrage from the community. They may have taken this to believe they were transacting with an internet exchange, which could ensure catastrophic failure would not lead to a loss of funds after all. However, it's almost certainly not the case that there were sinister motives. Harrison wrongfully communicated the relationship between FTX and the FDIC and was swiftly corrected before he immediately moved to rectify the official FTX position on deposit insurance. Nothing more than a storm in a teacup, one might say. The FDIC issued similar cease and desist letters to four other companies on the same day for the exact same reason, implying there is deposit insurance when none exists. It begs the question of whether this is really a result of nefarious actions. Companies like Celsius do represent a threat to the industry. There is plenty of chattering to throw around the crypto space. Take Celsius for example. It's fair to argue the company policy terms and conditions did not align with what it implied through its messaging. Around 1.7 million customers were left in the lurch with little idea of whether they would be able to retrieve their funds. Maybe just that from me. Thank you for listening. Don't forget to subscribe. Thank you. Goodbye.